Salesforce just reported earnings yesterday after market close. The stock's up 10%, and it looks like Salesforce just saved growth stocks. I'm going to tell you everything you need to know about Salesforce's earnings. Stick around to the very end because I'm going to tell you if I think Salesforce is a buy and if I'm considering buying it in my own portfolio. Let's jump into their earnings report. This is their press release. You can find it on their investor relations page. Salesforce announces strong first quarter fiscal 2023 results. They raised fiscal year 2023 GAAP operating margin guidance to 3.8% and non-GAAP operating margin guidance to 20.4%. First quarter revenue was $7.4 billion, up 24% year over year. Current remaining performance obligation, that's how much business they have essentially booked in advance, of $21.5 billion, up 21% year over year. So right there, clearly the book of business is strong. They're expecting strong growth in the future. No real concerns, and they're not seeing major hits from inflation and all of these fears. Does that mean inflation's not a thing? No, it just means that these growth type companies that don't have a lot of capital expenditures and things like oil fields and infrastructure and delivery vehicles and high gas prices, these software style companies, in my opinion, are very well set up as long as they provide an important service to their customers, and it's critical, which Salesforce is. They are set up for success in this kind of environment. Are the valuations going to come down? They already have a lot. Do they come down more? I don't know. What I'm really concerned about is the business important, and is it set up to continue being a successful business in the future? Because that's what I think is really going to matter over the next several years, and that's how I tried to invest. First quarter operating cash flow of $3.68 billion, up 14% year over year. They initiated second quarter fiscal year 2023 revenue guidance of $7.69 billion to $7.7, up 21% year over year. And they updated their fiscal year 23 revenue guidance to $31.7 billion, up 20% year over year. A quote from the CEO, "We had another great quarter delivering $7.4 billion in revenue, up 24% year over year. There is no greater measure of our resilience and the momentum in our business than the $42 billion we have in remaining performance obligation." It's exactly what I was just saying about the strength and reliability of some of these high growth software businesses that offer important products, platforms, and services to their customers that they really can't run their business without. That represents all future revenue under contract. While delivering incredible growth at scale, we're committed to consistent margin expansion. You're going to see this more and more from these companies. I want to own companies that are showing margin expansion and the ability to do that, not the ones that are just forever unprofitable. And cash flow growth is part of our long-term plan to drive top and bottom line performance. That just means top line is revenue growth, bottom line is earnings or income growth. Our financial results once again demonstrate the strength and durability of our business model as we continue to see strong demand from customers across the entire Customer 360 portfolio. That's all the products they own. They try to create this 360-degree circle around their customers and everything that they might need. Our portfolio of products remains well positioned to serve our broad set of customers, said the president and CFO of Salesforce. We have been able to deliver strong growth while also driving disciplined decision-making, enabling us to expand our operating margin guidance for the full year. Let's jump into their investor deck. Again, this is available on their investor relations page. I go deeper into this stuff in my stock write-ups and deeper research at austin.substack.com if you want that type of deep level research more than kind of just these high level videos. But hey, thanks for subscribing or watching this video. Would love it if you like the video and subscribe if it's valuable, if you like these earnings reviews so more people find them. Okay, just a quick primer on Salesforce. They are the number one customer relationship management software provider worldwide by revenue for 9 consecutive years. They essentially created that category, consistently delivering durable revenue growth, where they created that category in a software as a service subscription model, essentially a cloud model. Consistently delivering durable revenue growth, nearly doubling from $13.3 billion in fiscal year 19 to $26.5 billion. Fastest growing top 5 enterprise software with $26.5 billion in revenue. This is where their revenue comes from. They have the sales portion of their business growing 18% year over year. That's at $1.6 billion in quarterly revenue. The service side of the business up 17%, $1.8 billion. Those are their 2 largest segments. Platform and other, this includes Slack, which they acquired, $1.4 billion, growing 55% year over year, which is pretty incredible. And so that shows you kind of how important Slack was to their business model. Marketing and commerce, $1.1 billion, growing 22%. So these are the two segments of their business that are growing fastest. And then we've got data, which is MuleSoft, which was an acquisition, and Tableau, which was an acquisition, now getting up to $1 billion, growing 15% year over year. And then their revenue is pretty distributed by region. And what you'll notice is America is the largest portion at $4.9 billion. But their international segments are now becoming a significant portion of their revenue and actually growing faster at 33% and 24% than their revenue in the Americas. They've got a very strong balance sheet, a strong cash position with $13.5 billion in cash equivalents, and marketable securities. About half of that, just looking at this, is in cash, and then the other half is in marketable securities. Then they provided this update on what they think is their expanding TAMs. You got to be careful with total addressable markets. Companies can be crazy about them, but Salesforce has quite a bit of credibility based on what they've already done as a company. But this is just showing the expected growth from current calendar year 2022, which is this year, to calendar year 2026. They think it's going to grow up to a $284 billion total addressable market, which means their addressable market is growing 13% year over year for the next 4 years. They are still growing. They grew headcount 30% year over year in quarter one. So we saw them reaffirm their headcount growth. We saw Snowflake talking about strong headcount growth. That's very different than what we've seen from other logistics or industrial or retail businesses that are really hurting right now, cutting headcount and things like that. So, in my opinion, very strong report. And let's just look the response out there. There's an article on Seeking Alpha. Salesforce jumps on the back of strong Q1 results and guidance seen as bullish for tech. That's exactly what I said. I'll show you the companies I own in just a minute and how they're responding pre-market. I would guess that they're up. Seeking Alpha points out that Mark Benioff said there had been a whirlwind of recent business activity, probably meaning even after they reported, they're still seeing strong momentum into the next quarter. So that's great. That's probably what a lot of this 10% bounce is about. Seeking Alpha, again, right here, I love to look at the history of companies' earnings and revenue. And if you look every quarter since second quarter 2018, they have beaten analyst expectations on earnings and beaten analyst expectations on revenue. That's the type of thing you like to see, or I like to see from companies. So if we get to their valuation and their forward price to sales and price to earnings multiple, if we look to January 23, expected earnings per share of 477, that gives you a forward PE of 37. January 24, 575, and a forward PE of 30. So looks expensive to people that only like to own PEs under 15 or under 10 or whatever if you're a value investor. Annual revenue estimate, $31.87 billion for fiscal year 2023, giving it a forward price sales ratio of 5.5, and then 37.59, giving it a forward price to sales ratio of 4.7. Real quick, we're going to look at how the companies in my portfolio are reacting pre-market. Again, I would guess that they're up just like Salesforce, and we'll see what happens during market hours. Does this matter that much? No. But yep, it looks to be a good thing for the companies that I own in my portfolio. And so now let's get into whether or not Salesforce might be a good buy for somebody that likes growth stocks and these types of stocks. I don't personally own it. I'll let you know in just a minute if I'm probably going to be buying it or not. It is currently a 5-star rated stock on Morningstar, which tends to be a bit conservative. They have the fair value at 305, saying it's a 50% discount. The last close of 160, so it's going to be a little bit higher than that when it opens. They say they've got a wide economic moat, which I agree with, and standard capital allocation. That's probably because they've had a lot of acquisitions. I think that their capital allocation is a little bit better than standard. And so yesterday, Morningstar came out with an update, and they actually lowered their fair value to 305 from 320, which could be seen as a negative, but obviously the response is positive after hours. That's still way above the current stock price, and so it's like, why even do that? Who knows? That's what they did though. That was Morningstar, a very well-respected firm. I love to use fast graphs. You've seen me do it on videos before. And so what this is a graph that shows Salesforce's performance since 2004. You've got the current stock price in black. You have This orange line represents its normal price sales ratio over this entire period if you averaged it out. And clearly Salesforce is trading down below that, right? But look, it gets a little crazy here after COVID. So let's take that part out and see what the normalized price sales ratio drops down to. Even when we consider the 08 and 09 recession and the dip after that, and then kind of how things were from fiscal year 2009 to fiscal year 2017, you're looking at about 25% sales growth rate, which is about what they're forecasting, if I remember right, in the future, and a normalized price sales ratio of 7.31. I think that's a decent baseline to use. So let's go to forecasting, and this just takes into account what analysts are expecting for sales growth, revenue per share over the next 3 years. They're looking at 19%, 17%, and 17%. That growth rate is about 18%. So if we remember, the price sales ratio was around 7. So let's be a little bit conservative and take that down to 6.63. You're still looking at a total annualized rate of return of 26% through fiscal year 2025, which would be an 86% total return. And then even down to, right about a 5 price sales ratio, you're looking at an annualized rate of return of 13%. If you think about the market on average, the S&P 500 it generally returns 8 to 10%. So if you can own a high quality company like Salesforce, and with the price to sales multiple contracting, you're looking at a pretty strong investment opportunity if you like that type of company and you're comfortable with the risks there. Even down to a price sales ratio of 4.14, you're still looking at a 6% return, and that takes into account a reduction in price to sales ratio. Let's just look at if you had owned Salesforce, or what Salesforce has done for people that have held it for the last 18 years. It has returned 23% per year, meaning if you would have invested $10,000 in Salesforce in 2004, it has grown to $405,000. If there's a lesson to be left with from here, it's that having a long-term time horizon and owning the right companies can be life-changing for your returns. And the beautiful thing about investing is that we can build these positions up over time. The final verdict from me is that I don't currently own Salesforce. I'm strongly considering owning it, although I do think that there's companies that have longer growth trajectories that I own in my portfolio. The thing about them is they're a little bit more expensive on a price sales ratio, and Salesforce is such a proven operator. So I'm going to continue to do research. If you want access to what I'm going to buy before I buy it and stock write-ups, austin.substack.com is the best place to get that. That's my email newsletter. It'll be the first link in the description down below. But I have no issues with somebody owning Salesforce, especially down at these multiples and with what the stock and the management team has shown in the past and their ability to execute, the strength they're showing in this environment. Salesforce is a fantastic company and will probably be a pretty good investment for the right type of investor.